Good morning to Dr. Eric and our fellow classmates. We are from Group 4 and today we'll be presenting under the Banking and Financial Services portion, where the title of our case study is The Rise of Affin Hwang Capital to Prominence in the Investment Banking Industry Resulted from a Successful Merger and Acquisition. Before we proceed, let me introduce my group mates, which are Muhammad Imran, Muhammad Ruzain, Muizuddin, and me, Tengku Haris. The company that we'll be focusing on is Affin Hwang Capital. Affin Hwang is one of the subsidiaries for Affin Bank, where they provide capital markets advisory and execution services in investment banking, institutional and retail securities, and asset management. The group is composed of two core entities, which are Affin Hwang Investment Bank Berhad and Affin Hwang Asset Management Berhad. These two core entities are among the largest brokerage and asset managers in Malaysia. The merger process of Affin Hwang Capital was between Affin Holdings and Hwang DBS in 2014. The RM 1.36 billion mergers were funded by bridge loans. Affin Holdings will acquire the asset management, investment banking, and future businesses of Hwang DBS. Affin Holdings will later merge and transfer its businesses in the form of a vesting order on Affin Investment Bank Berhad and Hwang DBS to become Affin Hwang Investment Bank after the proposed acquisition is closed. With the completion of the acquisition, company under the Affin Hwang Group will later rebranded under a new name, which is Affin Hwang Capital. From the beginning, there were skeptics saying that the merger between Affin Investment Bank and Hwang DBS Investment Bank would not work. This is because the M&A trend in Malaysia has significantly dropped due to the nation's economy over the past couple of years. This is due to the price of oil drops followed by the Malaysian ringgit weaken against the US dollar in 2014. In 2015, the downtrend continues with the implementation of the Goods and Services Tax (GST), which came into effect by the Malaysian government. So with the condition of the nation's economy unstable and poor market sentiment, it would seem typical for a completed M&A company to fail because of these circumstances. Yet, a small niche market IB space company by the name of Affin Hwang Capital defies the odds and skeptic by managing to have a successful acquisition and cemented its position in the investment banking industry, becoming the top stockbroker in Malaysia. The purpose of our case study is to examine the successful M&A plan and strategies that transform Affin Hwang Capital, a small niche market IB space company, to become a big-time investment bank player in Malaysia. The content of our case study will be focusing on the M&A strategies implemented by Affin Holdings, where unlike other banking companies, these M&A succeeded. Secondly, we will look at Affin Hwang's plan or promise of the merger against the actual result of the post-merger. Next, we'll be looking at the financial analysis pre- and post-merger of the acquisition. And lastly, we will look at how this M&A adds value to the company after the acquisition, where Affin Hwang Capital was able to smoothly integrate key tangible and intangible factors of Hwang DBS, which is the key major ingredients in the acquisition strategies.
What is so special about the merger between Affin Holdings and Hwang DBS? The merger is special because there is less merger that succeeds during that time. Despite the success of Affin Holding Berhad and Hwang DBS, there is also a failed merger and acquisition in the banking industry, which involved Bank of America and Countrywide in 2008. In this acquisition, Bank of America paid a large amount of more than $4 billion for the takeover, but unfortunately, due to the financial crisis in that year, Bank of America ended up with a loss about $40 billion. This is because the housing bubble bursting that same year had the opposite effect, and various penalties and real estate losses relating to countrywide lending practices. In Malaysia, the merger acquisition is quite slow and many companies tend to cancel their plan. For example, CIMB Group Holdings planned a three-way merger with RHB Capital Berhad and Malaysia Building Society Berhad to become the largest mega bank in the country. The abortion of the plan is due to slower growth in the economy and the pressure of banking sector asset quality. Besides, the slow progress in the banking industry is due to the slowdown in the new account openings for the customer aged 35 and below, also affect the mergers and acquisition in the country. Hence, the banking industry had a decline in investment involving the customers. Next, I will be explaining about the strategy merger of Affin Hwang Capital. As we all know, the acquisition of Hwang DBS by Affin Holding Berhad occurred in early 2014. Before the takeover took place, Affin Holding Berhad must have acquisition strategies to ensure that the deal does not fail, as it involves a large amount of money, or else it will be a waste of money. The first element of the strategy is to increase the share of wallet of the existing customer base, and also to leverage the distribution of the company. Share of wallet is the amount of the money that a particular customer contributed to a company. The company will make the most of the money contributed by the customer by introducing multiple products that can create profit for the company. Nowadays, Affin Hwang Capital has many products for all types of business, including for SME and also corporate. Moreover, the strategy that is implemented by Affin Holding Berhad is to collaborate across the business so that the customer base will grow and to increase the opportunity of revenue that can be generated by the bank. Collaboration is important for the business as it can help the company to save up money, as there is maybe another company that is expertise in a particular area that needs to improve on. For example, after the acquisition, Affin Hwang Capital collaborates with AXA Affin Life Insurance and Pacific Trustees on the asset management to safeguard its investor wealth. Through this collaboration, it will offer a new service that covers wealth creation, wealth protection, and wealth distribution under one roof. Hence, it will give more valuable service to the existing customer of Affin Hwang Capital. Then, the strategy that is used by Affin Holding Berhad for this acquisition is launching a new business, which is wealth management. Wealth management is different from other investment advisory businesses. Affin Hwang Capital offers wealth management with global opportunities and client-focused solution. One of the products that are offered in the private retirement scheme, which is available for individuals and employers. The private retirement scheme is managed by experts, tax relief, and a low-cost choice. The last strategy that is used by Affin Holding Berhad to acquire Hwang DBS is increasing the investment in technology so that the company can operate at a lower cost and also maximizing the potential of the company. One of the importance of investing in technology is the company will improve its security, which includes preventing the breach of the customer's database. Besides, technology will enable the company to have a better interaction with the customer. One of the investment in technology that is made by Affin Hwang Capital is the creation of SME Colony mobile app, which is a platform for the bank and the SME to interact with each other, and it can provide proposition for them. As a result, in the long run, Affin Hwang Capital has been named as the best digital customer experience in SME banking. This shows that investment in technology is vital for the company. Key success of Affin Hwang Capital. One of the key to the success of this acquisition is Affin Hwang Capital able to grab the once of a lifetime opportunity when they saw that the Hwang family decided to pull out from the financial service business. Affin Holding Berhad saw the opportunity in acquiring Hwang DBS as there were significant complementary benefits and values to the acquisition. Moreover, it is difficult for a company to acquire a family business as it will pass by generation to another generation. With the situation of Hwang, Affin Holding Berhad only needs to propose an unrejectable amount of takeover, which is 1.36 billion ringgit Malaysia, despite also facing other competition to acquire it. Hwang DBS is also probably the last family businesses investment banking in Malaysia. Furthermore, the reason for the success of this acquisition is that Hwang DBS was clearly a stronger company in the asset management business. It really suits and ticks the box of the initial plan of Affin Holding Berhad, which is becoming a leading independent bank backed investment bank. Besides, Affin Hwang Capital also promised to the investor by delivering absolute returns. To keep this promise to the investors, Affin Hwang actively manage their funds. This approach will allow them to include high conviction bottom up stock picks and high quality credits and bonds. In essence, they choose to buy certain assets because they believe it works and not because of the market weights. This is the secret to delivering positive return at an acceptable level of risk in the medium to long term.
So for the third part, plan versus actual. Initial plan of the takeover. Initially, Affin Holding Berhad performed this takeover of Hwang DBS in order to fulfill its dream of becoming a leading independent bank-backed investment bank. Other than that, they are also to meet the certain needs of its planned strategy, such to create a stronghold in investment banking space for Affin. Taking combined traded volume and value as a measurement key, the combination of Affin and Hwang entities will lead to becoming a Malaysian top 2 brokerage house. While in terms of under management assets, it will result in a Malaysian top 5 asset manager worth RM30.01 billion of Affin and Hwang DBS accumulated under management asset as in the year 2014. To increase the end-to-end value proposition of investment bank, meaning that developing the investment bank value from the beginning to end. The merged businesses and large platform enhance the distribution, broaden the customer reach, and pioneering assets management tend to result in a strengthened end-to-end value proposition. Next, creation of revenue synergies. With RM32 million synergies revenue expected to be created after the acquisition. So this synergy will be powered by numerous factors such as access to Affin customer base and relationship to sell Hwang DBS product. Increase cross-selling of Affin product to Hwang customer base, increase the productivity for back office and function, and scale benefit for general administration and IT infrastructure costs. Real outcome of the takeover. Taking trading volume as a key measurement after the merger, Affin Hwang Investment Bank Berhad became the first on the rank whereby the firm acquired 14.14% of the market share. While in terms of value trading, Affin Hwang Investment Bank Berhad holds second position with acquired in total 10.98% market share behind CIMB Investment Bank who ranked first. Meanwhile, under the asset management, the initial plan are proved to work, whereas the bank is now listed among the top 5 players in asset management companies in Malaysia. The value of its asset under management worth RM31.9 billion as at the end of September 2015, slightly higher compared to 30.1 billion as at the end of December 2014. Affin Hwang, in terms of end-to-end value, has achieved a milestone accomplishment. The merger resulted in the bank obtaining better reach out to more government-linked companies and funds. It is due to Affin major shareholder held by Lembaga Tabung Angkatan Tentera. While another achievement obtained by the bank was establishment of its private equity arm. The private equity arm play a role to support and deploy capital to fast-growing private company with proven track record. Next is the creation of innovation lab led by the Chief Innovator Officer Alan Wu. This innovation lab is designed to improve the client experience as the bank acquire almost 5,000 new clients on average each year. While for the revenue, The results show for the year 2015, after the merger, the gross income almost doubled from 154 million to 264 million. It is driven by the synergy. The bank also obtained the benefit of asset management income worth RM 126 million in total, while the other income increased by RM 4 million from 11 million before merger to RM 15 million after merger.
Next, we move to the pre- and post-merger financial performance. We focus on some ratios including earnings per share, return on equity, and return on assets. First of all, we take a look at the current ratio. Current ratio is a liquidity ratio that measures the company's ability to pay the short-term obligations within 1 year. In the perspective of the investors, it shows how a company maximizes current asset to satisfy the current debt. From the current ratio graph, 2013 represents Hwang DBS, while 2014 onwards refer to the Affin Hwang Capital. Before the M&A occurred, current ratio for Hwang DBS was 1.2622. After the M&A took place, the current ratio fluctuated where the ratio dropped in 2015 due to low cash but started to increase and stable in 2016 with 1.0087 current ratio. Next, we move to the debt to equity ratio. Debt to equity ratio measures the percentage of a company financing by lenders or investors. After the M&A took place, the debt to equity ratio increased from 0.6081 in 2014 to 4.4161 in 2016. The main component that led to the increment was due to the increment in customer deposits. Although the ratio is high, it is acceptable because the company is in the capital-intensive industry, which led them to use more debt than others. Next, moving to the debt ratio. Debt ratio measures how much the company relies on debt to finance the assets. By looking at the analysis, the debt ratio increased from pre-M&A to post-M&A. Besides that, asset turnover shows how efficient a company in generating revenue using the assets. Based on the analysis, it shows increment in the asset turnover from 2013 to 2016. It shows positive impact from the acquisition where it shows the company able to generate profit by using the assets efficiently. While for the earnings per share, after the acquisition took place, it increased from 5.89 cents to 15.75 cents in 2017 before started to drop in 2018 with an earning per share of 13.78 cents. Next, we move to the ROA and ROE. Return on assets shows how profitable a company's asset in generating revenue. From the analysis, the ROA increased before the acquisition from 0.01371 in 2013 to 0.0707 in 2014 before started decline in 2016 at 0.0570. Although the ROA declined, the company is still having a good return on assets. While for ROE, it measures company's ability to turn equity capital into net profit. In the perspective of Affin Hwang Capital, their ROE kept increasing started 2014 to 2016 from 0.3410 to 0.3608. It shows that Affin Hwang Capital able to generate income from the investors. Overall, it shows that this M&A was a success by looking at the analysis made follows with the financial performance in the post-merger. Although they have a high debt ratio and debt to equity ratio, they are still able to generate profit. Furthermore, Affin Hwang Capital is in the capital-intensive industry. Therefore, it is acceptable for them to have high debt ratio and debt to equity ratio.
The fifth one, value added from the merger. Value added after the merger and acquisition. First, corporate structure. New cultural norm, relatively flat structure toward corporate structure of the firm has been introduced, meaning that an increase in subordinate empowerment to create more opportunities. Affin Huang's staff had a great opportunity to step up and take more serious responsibility compared to previous. From this action, they successfully discovered many talented staff who were able to step outside their comfort zone. Previously, Hwang was driven by entrepreneurial culture while Affin was driven by more on the process culture. Together, an effort has been made to keep Hwang entrepreneurial spirit alive to ensure the thriving asset management business.
Next, we move to the cost and revenue synergy. As for the synergy, they put more focus on revenue and cost synergy. One of the main objectives for this M&A was to reduce the cost and to boost the revenue. It is proven where the revenue consistently increased from 2013, refer to Hwang DBS, to 2019, refer to the Affin Hwang Capital in overall. Although the revenue dropped in 2018, it was due to the low investment income based on the annual report. As for the cost synergy, it is proven that they successfully reduced the cost, although there was increment in the cost in year 2014 to 2015. This was due to the integration costs of both companies during the M&A process. After the increment, it started to decline consistently to 2019. Overall, revenue and cost synergy add value after the merger, where this M&A achieved both revenue and cost synergy, which helped Affin Hwang Capital to keep growing and performing well in the industry.
The customer base. Affin Hwang Capital was able to aid and retain its client value. After the acquisition, the increase of customer is due to the cross-selling opportunities where Affin was able to bring its existing product to Hwang customer base. The contribution of the customer base gave Affin a huge opportunity in which it increases its diversity, which is geographical and demographic of the customer base. Affin Hwang was able to add more clients from Hwang DBS due to cross-selling its loan advance and financing product, in which the evidence can be shown from the table. There is an increase and high demand for Affin products from different part of Malaysia state, such in Selangor, increased almost 200%, while in Johor almost at 1000%, and wilayah Persekutuan recorded 90% increase in the year of 2014, where it's recorded off the chart.
Lastly is branding image. During an M&A strategizing process, branding image is often found to be omitted where companies tend to focus its concern on its operation, financial, and logistics. A consistent brand strategies will make the change much easier and provide valuable incentive for providing a positive message about the importance of the merged company both internally and externally. For Affin's case, they included branding image where they implemented fusion or blend branding approach. Affin's approach is combining the name of Affin and Hwang and also launching a new visual logo. This approach suggests that the potential of both firms will continue to be leveraged, merging expertise and discarding flaws from both sides. The new branding name of Affin Hwang Capital adds value to the company by showing a strong message and signals about the direction of the company is heading post-merger, especially to major shareholders. With the new branding name, Affin Hwang still has significant support from major shareholders, especially Lembaga Tabung Angkatan Tentera (LTAT), where it holds 47.6% of Affin Hwang through Affin Holdings. The support and trust of LTAT is important because they play a huge role in the merger, where they support by financing the acquisition of Hwang DBS with RM435 million subscription of rights shares. Next, a branding image adds value where it increases the company's image and perception of the public. Affin Hwang's financial and management performance post-merger resulted in the company receiving various awards over the years. The latest and most proud achievement for Affin Hwang Capital was receiving Bursa's most coveted award, which is the Best Broker Award for the fifth consecutive year in 2019. Thus, branding image proved to add value post-merger, where it further solidifies Affin Hwang's brand and reputation as a leading investment bank in Malaysia.
Hence, from this case study, we can see that the rise of Affin Hwang Capital to prominence in the investment banking industry resulted from a successful merger and acquisition. Affin Hwang Capital implies the key strategy as mentioned earlier to sustain and maintain in the industry. It is not easy for a merger and acquisition to succeed in this particular economy. Therefore, All of the company that insist to merge and acquire need to plan it carefully with fine detail to achieve their target. Besides, other companies also can refer to the merger of Affin Holding and Hwang DBS for their guideline. As a result of the merger, Affin Hwang Capital has become one of the top investment banks in Malaysia. Here are our reference for the case study, and with that, thank you.